Hey, what's up everybody? Welcome to Allah's World of Finance. In this quick video, we're going to talk about a stock that is giving $7.50 as a special dividend. And I actually heard about this by one of my subscribers, from one of my subscribers in the comment section of my last video. And so I want to say thank you. I asked if they wanted a shout out, if I could give them a shout out, but they didn't reply to the comment. So I don't really feel comfortable saying their name without their permission. I'll go ahead and check really quick if they replied, but I believe no, they still haven't. Yeah, I still haven't replied. So if you know who you are, if you do want a shout out, I'll give you a shout out in a future video. But anyway, thanks for the information, because I know that my viewers and the subscribers will really enjoy this information. So this is really great. So what's going on here is the stock that we're looking at is Bob Evans Farms, and their ticker symbol is BOBE. And so here's what's happening with them. So their business has to do with Bob Evans restaurants, and there's two parts: Bob Evans restaurants and packaged foods. So they also work with prepared foods. Well, their restaurant locations, they have 600 locations in 24 states, and that is mostly in the Mid-Atlantic, Midwestern, and Upper Southern states. And I live in California, and I haven't really heard of them. To be honest, I've never heard of this stock, Bob Evans Farms, never heard of them. So I'm going to cover a little bit about what's going on with them, why their dividend is as high as it is, and if they're a stock that you should look further into. So what happened is, in January, they had an announcement where they announced that they're going to sell Bob Evans restaurants, and the restaurants are going to be sold to an equity firm called Golden Gate Capital, and they basically completed the sale in March for $565 million. So a lot of money there. Now their business is going to be split because they sold the restaurant portion. So now they're only going to deal with prepared foods and packaged foods and things like that. So, and they also acquired Pineland Farms Potato Company, which deals with processing potato products and cheese products. So that is also going to help them with their packaged foods and prepared foods business. And this is actually sort of a good thing because, not everybody, but a lot of analysts think that restaurant businesses are, in the restaurant market, is a little overpriced and overvalued at the moment. So it may be a good time for them to get away from the restaurant business and focus all their efforts in just one side of the business. And they've actually been doing pretty good in that packaged foods business. So it may be a good move on their part. Now, they have a really good dividend history. They've been paying dividends for the last 30 years. And for the last 9 years, they have a 9-year streak of increasing dividends. Okay, so pretty good dividend history there. Now, what they're doing is, because they sold the restaurants for $565 million, they basically announced that they're going to have a special dividend bonus, kind of a dividend add-on. And this extra dividend is going to be $7.50 per share, which is very high. And that is in addition to their regular dividends, which is at 34 cents per share. So it's really going to be around $7.84 per share. Now, this basically equates to a return to investors of around $150 million. So from the 565, they're basically returning 150 to investors, which can be a good thing or it could be a bad thing. Maybe that's money that they should be using to grow their business, but I'm sure investors are really happy with it. Now, the declaration date, and by the way, before I start mentioning all these different things about dividends, I actually have a video coming up. It'll probably be posted the day after this video, where I explain how dividends work and all of that. So I don't want to make this video super long explaining how dividends work, but if you are a little confused by this video, just watch the next one that's coming up, and that will explain everything that has to do with dividends, and then you'll understand everything that I'm saying. But their declaration date was on May 3rd. Their ex-dividend date is on May 25th, so you have to make sure that you get stock by May 25th if you want to make this play. And the record date is May 30, and then the payout date is June 16th, okay? So let's see here. So when looking at their pros, in the last 6 years, they have reduced outstanding shares by 35%, okay? Basically by doing buybacks, by doing share buybacks. So that's a good thing. And their dividend history is outstanding. We spoke about it just a second ago. Their dividend future is positive because they also mentioned that they want to keep going with dividends, and they want to have that being a big part of their stock. So it's a bright future there as well. And then the business transition can be seen as something positive as well, getting away from something that may be a little overvalued, like the restaurant business, and moving to packaged foods where they have been doing pretty well. Now, their cons that come with their stock is that they may be overvalued because, well, obviously this dividend is going to attract a lot of investors, but there's also that when we look at their history, you will see that they've actually increased by a lot of percents. So they may be a little overvalued now, and their PE ratio is high. So we'll talk about those two things. So let's start with Robinhood numbers. So I got these from Robinhood and the Robinhood app. And for the week, they're up 6.82%. For the month, up 6.18%. For the last 3 months, up 26%. For a year, up 58%. And then 5 years, up 100%. So they've increased a lot. And when we look at their 52-week numbers, their 52-week low was at $35. 52-week high is around $72 and currently at around $71. And that 52-week high was actually on the same day of their current $71. So they just reached their 52-week high. So they're at the top of the top right now. So are they overvalued? Probably. But you know, I mean, I can't say for sure, but they're valued very high right now. And when we look at the PE ratios, I got these from NASDAQ.com. The 2016 actual PE ratio was at 34.86, so a bit high there. 2017 estimates are at 31, and then 2018 estimates at 28.8. So pretty high PE ratios as well. So are they a little overvalued? Perhaps. So you may have to do a little more research and look a little deeper into them. But if you really like dividends, this may be a really nice play to pick up a lot of dividend cash there. What I'm worried about though is are they going to drop after that ex-dividend date? You know, I'm not too sure, so we'll have to wait and see. But I'll definitely be making a follow-up video to this. So anyway, I hope that you enjoyed the video. If you're new, please subscribe. I do videos like this all the time where I break down stocks. And please like the video and leave your comments below. All right, have a wonderful, beautiful day. Take care.